Welcome back, traders and investors. Before we bring Serge on here, we got something going on in Coca-Cola. Just exploded here, up over $42, 42.79. That is blowing away major levels here, starting to pull back. If we pull back since that level, Brent is jamming the news wires here at Coca-Cola. What are they doing? Buying more GMCR or what's going?
I don't see any headlines. I'm digging into this one right now.
Okay, Coca-Cola, folks. We'll have to wait to see what the news is. Just keeping an eye. We had the recent high of the move at 43.43. We didn't get back to that level, but we'll have to see what took. Maybe we had a fat finger in the pre-market. But sorry about that, Surge. Just wanted to cover that moving stock. Head trader at the Steady Trader. Surge, how you doing today?
I'm good. I'm good, guys. It seems like every time I'm coming on, the futures are down like 10 handles. I remember that last time I came on, we had futures coming off something about maybe I shouldn't come on anymore, maybe that's
No,
not good for the
no.
market.
No, man, you got to get some way to get my puts back in the money here. But we talk a lot about technical analysis, and we talk a lot about shorter term trading, and we've also stressed about lengthening your time horizon now, not trying to compete with the high frequency traders, and you're interested in talking about the bigger picture view of stocks and where are we in this current cyclical bull market.
Yeah, I mean, I think that, that's exactly the kind of words I would probably start to describe it. I mean, if I always say in order to understand what you're going to trade, you got to understand the broader market and particularly the market structure. And, really from a cyclical perspective, we are probably very much in the last innings here of the, basic the rally that started into the early 2009 abyss. So I still think we probably started a new secular bull market, which means that this cyclical bull market that we're probably going to come to the end of here at some point in the next few weeks, maybe a couple months or something like that, roughly, shouldn't be something that should lead people to just, sell everything and hibernate again. If history's any guidance, we should just, have say a 15, 20% correction or something like that in the S&P and then continue to churn higher.
So how should investors play it? I mean, they've had a great run up. People are sitting on a lot of profits here. How do you play this here? Do you stick it out and you ride the downward, or do you try and get yourself some downside protection, or if you're
Mhm.
nearing retirement or you're planning to buy a new house or something, is it time to take some major chips off the table?
Yeah, I mean, I think it really depends on, where you're at, just like you're saying. So, um, the just to give you a little perspective in terms of this year, I talked to a lot of my, hedge fund colleagues, every day, every week, and I can tell you a lot of people have had a very hard time trading this market. So, in the professional circuit, so you probably have a lot of folks that stayed the course. Sort of private individuals that stayed the course and remain invested throughout this year. They've probably at the margin done better than some of the professional guys who were invested purely in say some of the momentum stuff, and then that crashed, and then we have no volatility. We have very little directional movement. So, roughly speaking, the average true range in the S&P is very low. So, I think it's important to understand that it's just a difficult market, even for the pros, or particularly for the pros. So it's going to and it's going to remain difficult for some time. So I think, obviously, the simple thing to do would be just to buy some puts. I mean, with the VIX, or is it above 12 now or something yesterday?
Nah, it tried.
Right. So, that's a pesky little area to watch. But, are we going to see an 18 handle on the VIX at some point in the next, 6 months? I think so. So how do
Really?
you
You
play?
do?
Yeah, yeah, I think so. At some
Wow.
point over the next 6-ish months.
So you got
Yeah,
to
I
go a
mean,
little bit. You got to get a little bit longer out then, right? So
oh yeah, for sure,
if you're going
for
out that
sure.
far though, aren't you kind of giving in to the premium demons?
Well, that's the thing, right? So I was just going to get to that. So the question is, how do you play it? And if you're sitting on a portfolio of long stuff, I think you start rotating out of the cyclical stuff and start looking at some of the things that are historically going to do better. When you have a defensive area, the problem is even the staples and the utilities are starting to get a little frothy, although utilities are looking better. So I think, quite frankly, it's a pretty good idea to just unload on some of the cyclical stuff and just wait a little bit. At some point, volatility will start to creep higher, and then you can also tighten your duration a little bit. At that point, you probably don't have to wait, 3 months for a volatility rally. At that point, you're probably a little bit closer. So, or listen, at the end of the day, why don't you can also just short some Russell 2000. That's worked all year. Shorting growth, and we typically see sort of like these 3 to 6 month plus divergences at the top of a cyclical bull market between small and large caps. And, it's probably not going to be different this time. So we should see underperformance on the Russell. So you can always short some of that versus a broader basket of stocks. I don't think that's,
Not a bad
that's too
idea.
much of a risky thing.
Coming in, we have a triple witch expiration this week, and sometimes that's a strong continuation of the current trend, or a lot of times you get a reversal. Do you adjust your trading strategies at all for these triple witch expirations? Are you a little bit more cautious? We were just talking to Nick Shaheen. He kind of is a little leery. You also got a Fed meeting going this week. Do you adjust your strategies at all, depending on the fundamental and macro events that are going on?
Very much so. I always tell my clients, whether they're direct clients or indirect clients, I always tell them, listen, at the end of the day, if you look at this business as a business and not something just to have fun with, you naturally start becoming a lot more risk averse in a good way, right? So to me, for example, in the summer months, that means no trading on Fridays. Why? It doesn't make any sense. I know most of my hedge fund buddies are out, after 11 o'clock in the morning. So they're gone for the week. Why would I stick around? It's just machines pinging around. Same thing on summer Mondays. And it's the same thing for a week like this week, right? So basically, as of this afternoon, to me, it's not worth trading. So you just wait until all the noise is over tomorrow, and then you do something again. And an options expiration Friday, unless you're a hardcore options dude, where you can really take care of some of the skews and stuff like that, I think the average investor has no reason to trade on an options expiration Friday.
Now where are you based out of?
I spend a lot of time in Europe, but I'm mostly based in Florida.
Okay. So where are you at now? Are you in Florida or Europe?
Yeah, in Florida.
Oh, okay. Because I was just going to ask you about how you adjust your trading schedule when you're over there.
It works pretty well. It's like anything, you need a rhythm. I always say, to me, there's basically two time zones that work. That's sort of East Coast US and basically say Central European time, or maybe say London time. The rest is hard, right? So if I was in Asia, it wouldn't work. But actually works very well in Europe because I do a lot of my research in the morning then, and then I'm not a huge afternoon trader. So by like 6 o'clock in Europe, it's like noon in the US, the East Coast. So then it's a little bit of watching a tape, but it works out well.
So you have all your parameters and everything, your entries, your exits, whatever you want to do. You have that. Do you have that predetermined before the open each day? So you're just waiting for the stocks or the futures to get those levels to react, or are you more reactionary? You see what's going on in the market and then you adjust your positions accordingly.
It's both. What I try to do, or what I do is I scan probably 500-600 stocks a day
Wow.
throughout the research that I do and stuff like that. And basically, like I had at some point I had 10 screens on my desks on both sides of the Atlantic, like on each desk 10, and it's because I had so many watch lists. And it worked, but it was really useless. So what I started doing, I just started setting a ton of alerts. Literally, I probably have like 3, 4, 5 plus hundred, alerts. So when those things hit, so when the market opens in 15 minutes, I'm probably going to get 10, 20, 30 alerts. And then I scan through those of the first hour, or maybe even in the later part of the morning. And then that way I don't have to keep a humongous list of stuff, It actually works very well that way, I have to say. So do I have stuff predetermined? yes, I know. I know what are interesting levels for me to look for, and then when I get into a stock, there's always a predetermined stop, right? A hard stop, and a price target. But the price target, obviously, you have to see how quickly a stock moves. So the price target will be something that I'm happy to adjust. But certainly the stop, the worst case stop, never moves. Doesn't mean I can't stop myself early though.
Okay, let's get into some individual issues here, and let's start out with Twitter. It's come all the way back to fill the gap from that disastrous move down to 29.51. Are you active in this stock at all? I mean, I know if you're following the fundamentals, I mean, you're just basically waiting for for the company to make money, which we don't
Mm.
know when that's going to happen. But could you give us your take? Could you give us your take on Twitter?
For sure. Twitter. To me, it's just been it's been a great stock to trade, just because as much as the downdraft was very nasty off of the top. Was it late last year still? Yeah, it was in the December, right? But it was very orderly, and then really the washout there that you referred to in early May really resulted in the stock finally be able to stabilize because it really just took out all the stops, right? So the market makers had a
Had a
field day on May 6th. Um, so then it really just took the stock a few weeks to go sideways, and then that mean reversion move that we've now had over the past call it a week and a half was a very high probability, and I think the stock can probably fully close that gap somewhere near the high 38s, and then we'll have to reevaluate.
Right, it did, and I believe the first month of trading that this made a low at 38.90, then bounced up to 50. We all know what happened after that, so definitely I'm looking to see some of the resistance here. We'll see what happens. I just don't expect it to blow through that area. Also, moving on, some of the other momentum stocks that people like to talk about here have been making moves. Now, when you see those momentum stocks, does that make you a little bit more leery of the market when you see that the momentum players are leading the market?
Yeah, I think it depends where we are, right? I mean, like for example, coming into this year, if you just look at the SOCL, for example, which is the social media index, you saw that was getting a little bit frothy, and then with the broader market where it was, it was just the ascent was just too steep. So I think at this point, it's I don't have as much of a problem buying or even trading these stocks here as I had earlier this year. Earlier this year, some started acting funky. There was no real, from a technical point of view, nothing real, no real tight basis to trade. But now a lot of these got bombed out. Particularly Twitter and it's to me it's a much higher probability environment to trade those things again. Keeping in mind where we are in the cyclical world, though.
Also, boy, all the mergers and acquisitions going on. I mean, companies not investing in themselves, own R&D, creating new products, hiring new people, instead looking for growth by acquiring other companies. You have, Tyson Foods paying a ridiculous premium to take over Hillshire Brands in a bidding war. Do you think that's symptomatic of a short-term or long-term top in the market?
I, I would think that this is probably more so a boost of confidence that some of these guys just didn't have before. Also from a buyback perspective, I think a lot of the you know it really took a few years for some of the investor psychology to kind of turn the corner, at least from the institutional, like the corporations, right? So I think now that there's more confidence out there, I think they feel a bit more they feel better about actually buying stuff. Of course, it's not coincidental that this is happening more or less now, like we said, so much near the top of a cyclical bull market. But I don't think any of these things are as crazy as some of the say the leverage buyouts were like in 2007. In the summer of 2007, I remember I was working at JP Morgan at the time, trading credit default swaps. And I mean, that you think this is frothy and crazy. that was just, bananas. And and everyone knew it. That was the problem. I think this time around, a lot of people are doubting some of these things. Back then, the sell side knew about it, but the buy side was still quite happy about it. Now it's sort of the reverse. Now you have, or at least from an investor perspective, now you have the corporations feeling good about it, but the general mood out there still isn't good enough. So, which is why this bull market basically just keeps going still.
Okay, we've had Serge Berger on, head trader and investment strategist at the Steady Trader, giving us a cautious but optimistic outlook for the market. Serge, thanks for coming on, and we'd like to have you on again.
Thank you very much. I'd appreciate that.